Hello, everyone. As you may know, crypto is moving very fast right now, but most people are actually missing what actually matters. So today, we're going to be breaking down the biggest crypto stories right now, and more importantly, what they mean if you're trading in this market. Now we have Bitcoin is holding strong above the $74,000 to $75,000 level. And what's interesting isn't just the price, it's actually why it's holding. So, right now, we're seeing strong inflows into Bitcoin ETFs, which actually means institutional money. So, it's big capital that is entering the market. Even with this global uncertainty, Bitcoin isn't dumping. And that is a sign of that underlying strength. And, from a trading perspective, this tells us one thing. There's still demand at higher prices. So instead of blindly shorting resistance, you need to respect that the market has strong buyers stepping in. So this isn't just a retail driven rally anymore. It's institutions that are supporting the price. And then now we have institutional adoption that just took another step forward. So Deutsche Börse, if that's the correct way of saying it, is one of the largest financial exchanges in the world. So what's happened is that they've just invested around 200 million into Kraken. This is a very, very big deal because it shows traditional finance isn't ignoring crypto anymore. They're kind of integrating with it. And when institutions get involved, they don't think short term. They think years, not days. And for traders, this actually does change the game. So this does mean that we're going to see more liquidity, more stability over time, and potentially fewer extreme crashes like we've seen in the past. But this also means that the market becomes more efficient, which means having an actual edge is even more important. So don't worry, smart money isn't leaving crypto, it's actually doubling down. And now this is the risk side of crypto. A massive $280 million hack just hit the market. And what's interesting is how it happened. It wasn't just technical, it involved social engineering and manipulation. So this is a reminder that crypto isn't just volatile, it's still developing. And as for traders, this matters because events like this can trigger sudden sell-offs, panic, and volatility spikes. And while volatility is a double-edged sword, it creates opportunity but also risk. So if you're trading this market, you need to be aware that headlines like this can move price very quickly. And remember, the biggest risk in crypto isn't always the chart, it's the unexpected. So when you put all of this together, here's the bigger picture for Bitcoin. You've got strong institutional inflows supporting price, you've got major financial players entering the space, and you've got ongoing risks creating volatility. And that combination there is very, very powerful because it means we're likely entering a market where the long-term trend is up, but short-term volatility stays high. And as for traders, that's exactly where opportunity lives. So the key isn't even predicting every move. It's managing risk and positioning yourself where probabilities are in your favor. So if you're going to take anything away from this video, let it be this. Crypto right now is being driven by institutional money, evolving risks, and increasing adoption. And if you understand those three things, you're already ahead of most traders. And now don't forget, if you want to trade in these kinds of volatile conditions, check out the link in the description below where you'll find Everdex, which is also the platform I use personally for all of my trading. So as always, thank you guys for watching. Drop a like, make sure to subscribe to stay up to speed with all the latest videos. Thank you for watching, and I'll see you in the next one.